Hi, I'm D. Scott Kennick, founder and principal of Wealth Concepts Group. We specialize in creating prosperous and safe retirement plans for our clients. Before we begin talking about choosing a financial professional, I want to relay a conversation I had with Robert and Deborah. Robert was a mechanic and Deborah was a bookkeeper. They were in their mid-50s. They had just finished paying off the parent loans for college for their two kids, and retirement was getting closer and very much on their minds. They contacted me to talk about their retirement account because they were concerned when their balance dropped a lot. They were down over $50,000. Now, I spent quite a bit of time talking to them about market risk and crashes. The look on their face can only be described as fright. They knew their account was dropping, but they truly didn't understand the short and long-term risks of the stock market. They were just a few years from retirement and very concerned that more losses would derail their plans to travel and spend time with the future grandkids. I explained that in their younger working years, growth and accumulation was important, but the closer they got to retirement, it was vital to shift their goals to protection and income so crashes would not destroy their retirement. Younger investors can weather market crashes, but the closer the retirement date, the more devastating the crashes can be. Then I showed them how they could earn stock market-like profits in an account that was protected no matter what happened in the market. They were elated. I could tell that they really didn't want to say, but they admitted that they were talking to a few other financial professionals at the same time they were speaking with me. They told me that because they wanted to say how astonished they were that none of the others talked about risks and losses. They said they were glad to finally meet a financial professional that not only explained the risks, but actually had a solution to protect their retirement from crashes. And I can do the same for you. Call me for an introductory conversation or book a time on my website. All right, let's get to it. Choosing a financial advisor can be a very difficult decision. You're trusting decades of work and hard-earned savings with this individual, and the scary part is that there's no clear-cut way of determining what he or she may do for you in the future. You may not even know what questions to ask, so you end up making vital financial decisions based on hunches. But here's a question to ask yourself that many people overlook. Are they telling you the whole story when it comes to the stock market? Now, investing is risky. We see that now with the high volatility in the market. Risk not only includes risk on specific stocks and mutual funds, but overall market risk as well. And market crashes can take down any stock, even as it's considered a so-called low-risk investment. Now, looking at the history of the stock market, it's best described as a roller coaster, as this chart shows. This is the stock market from 1930 on. Take a look at all the losses at the bottom half of the chart. The stock market has been riding so high for so long that many investors have forgotten about risk and losses. Ever hear this expression, my 401k has turned into a 201k? Well, it's a funny saying, but it's got a lot of truth to it, and you hear it quite a bit every time the market crashes. And it's not just 401ks. IRAs and brokerage accounts can and do crash right alongside the 401ks. Now, mitigating risk and increasing profit is most people's goals, but did the financial professional that you're interviewing discuss risk and market crashes with you? Did the financial professional show you the history of the stock market and how it crashes 47% every 11 years on average? Did he or she tell you that we're far past that 11-year mark and we're expecting major crashes? Did they mention the average time that it takes to break even from a major crash is over 6 years? Did the professional describe how even so-called safe investments can drop during crashes? Did the financial professional explain how major crashes could devastate your savings and put your retirement at risk? Did he or she mention that you can see several crashes now through your retirement? And very importantly, did the prospective professional show you a plan to protect your savings from market crashes? Did you answer no to most, if not all, these questions? I will address all of these concerns and more, but many financial professionals do not. Why? Well, they don't discuss these issues because, well, quite frankly, if you truly understood the risk of the stock market, you may not be so willing to invest your hard-earned money with them. Now, I'm the exact opposite. I will show you the risk, and most importantly, I'll show you how to avoid those risks and losses and how to protect your account no matter what happens in the market. Now, here's why this is so important. This chart shows a list of the major crashes in the 120-year history of the stock market. Now, let's talk about a few of the latest ones. In 1987, we had Black Tuesday, and the market lost 36%. Took 3 years just to break even. 2000-2003, we had the dot-com crash. The tech stocks lost about 70%, and the market lost 32% overall on average. This crash took 6 years just to break even. We can't forget the housing crisis, 2007 through 2008, when the stock market lost an average of 49%. It was 5 long years before we saw the market recover our losses. In the last 20 years, we spent 11 of those just trying to dig out of a hole, just trying to break even. The chart shows that the stock market crashes 47% every 11 years on average. 47% crash every 11 years. The scary part is that we're way past that 11-year mark. We're expecting major crashes. We just don't know when. Now, our stress-free retirement plan will protect your account no matter what happens in the market. I'll create a custom written plan designed specifically for you to protect your account from market risk and provide stock market-like profits in an account that is protected no matter what happens in the stock market. And vitally important, your plan can include a pension-like lifetime income stream that you and your spouse can never outlive. Our stress-free retirement plan does all that. You participate in the profits of the market in an account that is protected no matter what happens in the market, and you can get income for life. You've worked all of your life to build your retirement savings. Rather than work with someone who wants to sell you risky investments, doesn't it make sense to have a plan specifically created for you that's designed for both safety and growth? If so, let's talk, and I'll help you build a no-stress retirement with a customized written plan created with your specific goals and needs in mind. Call me for an introductory conversation or book a time to talk on my website. Thanks for your time, and I wish you a safe, prosperous, and no-stress retirement.